A powerful business phenomenon has been taking place where the Great Resignation has now become what they have labeled as the Great Gloom. We'll talk about what this means against the stock market, what this means against corporate America, and how it may play out in the economy. Stay tuned. We're going there next.
Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a bi-weekly show that aims to focus on the trend lines rather than the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Today I'm going to be discussing, as we always do here on the Trending Report, how various things going on in the economy and the world around us and business in general is affecting the stock market. We're going to look at the market through 4 different lenses. We're going to look at capitalization, going from large cap to small cap. We're going to go look at the 11 different sectors that make up the S&P 500. We're going to look at things from an international perspective, and then we're also going to wrap that up talking about some bond perspectives. Now, with that being said, we're also going to go a little bit off the beaten path today, and we're going to discuss this trend. I guess that fits with the Trending Report, a trend, for lack of a better word. The Great Resignation, which I'm sure you've all heard of, has been maturing and evolving, and today they're now starting to call it the Great Gloom. And it is an issue that business and the economy is going to have to address so that it does not have a negative impact on the stock market. So we are going to spend some time on that today. It's very much a forewarning. It's a very long road, I would say, for that getting to the issues impacting heavily on the stock market, but nonetheless, it is important to business in general. So we'll be talking about that. And then, of course, our data is as of last Friday, which is September 8th. So let's jump right in. Now, as I mentioned, the Great Gloom is kind of the next phase of the Great Resignation. And basically, it's about the fact that employees are unusually unhappy. In fact, they're saying they're unhappier than ever. And the question then becomes, why is that? And there's plenty of new stats out there. You can see some of that on your screen here. But what I really want to draw your attention to is take a look here, starting in January of last year, that's 2022, and we look at where happiness is from an employee perspective, and look at the line, the trajectory that is taking place on this last year and a half to 2 years. It's really taken a dramatic downturn in a way that we have not seen before. In fact, over here, look at this. They're saying it's dropping 10 times faster than in the previous 3 years. And it's really an issue because it has to do with not just employee happiness, but I will contend it has to do with productivity. Because if you take a look at this little 4-quadrant matrix, what you'll see up here is high happiness is up at the top, and high productivity is over here on the right. So people, if you will, employees, and all of us for that matter, people are looking for high happiness. Companies, corporate America, is looking for high productivity. Nobody wants to be down here in low happiness and low productivity. And the common ground for people and companies is to be in the upper right-hand area here in high happiness and high productivity. But right now, what this chart over here to the left is showing us, and this declining trend we just talked about, is it's essentially telling you that we're at low happiness. And being at low happiness gets very dangerous because the likelihood of maintaining low happiness with high productivity is pretty slim, as we all know, and people start to job jump or they simply aren't putting strong effort into their daily events at work. So once you're into a low happiness position, my contention would be you're going to start drifting back over this way. So this is going to be a hurdle that the U.S. business world has to get over, and we're already seeing this. In fact, Zoom, of all companies, the video conference and video meeting company Zoom is trying to get its employees back into its offices. So if you're the company who promotes remote work and you're trying to bring people back in, that becomes a pretty difficult sales job to those employees, especially those white collar employees who have come to enjoy this. Now, when we talk about enjoyment and happiness, the problem seems to be, and I am no psychologist, but from a lot of the readings that I've done, is white collar employees love the idea of being able to do remote work. However, as much as they love that idea, the reality is people are built for community. And when you're isolated in your house or your den or your office at home doing work day in, day out, without the physical interactions of all the other people on your team, your employee and your workmates, your happiness tends to go down. So even though you think you might like the remote work, you need to find some balance in there. And that's what companies are struggling with in order to keep happiness up, which in turn buoys up high productivity. So it's going to be a challenge. It's something corporate America is going to have to tackle. They're starting to realize that now, and eventually it's going to have an impact on the markets. And with that said, let's jump into those markets. Excuse me. So here we are looking at capitalization, and we're looking at large cap all the way through small cap, and we're basically ranking things so that we can see where is the trend. Is it tilting bullish or is it tilting bearish? And where is the swing or the shorter term swing taking place, bearish or bullish? Up here at the top, you'll see we're all green, meaning we're getting agreement. We've got our check marks right here. We're in agreement. The trend and the swing are both showing bullish. And what you'll notice over here is everything that is occurring on is large cap stocks. So we're seeing the S&P 500, the S&P 100, the NASDAQ 100, which is the QQQ right up here at the top of the list. And it doesn't really matter if it's value or if it's growth or if it's the index itself. It's the large caps that are winning the day. Now, when we come down here and we're looking at mid caps to small caps, that's the 400 and the 600, we're seeing an actual perfect split. The swings have all turned bearish, yet the trends are still hanging on as bullish. So it's going to be a matter of time to see which one wins. But here, this blue bar, we've got the total stock market. As you can see, we are still seeing a nice upward bullish trend. This is our trend right here. You can see it turned green back in early 2023. That's basically this down here. And then we've got the swing right here. And you can see we came out of this bearish swing, and we're currently showing a bullish end of that swing right now. But again, we have to wait and see where it's going to go. If the small cap and mid cap is going to draw the large cap down, or if the large cap can buoy back the market and bring the small and the mid caps along with it. Now, if we take a look at the same basic data, but view it through the sector lens, the 11 different sectors that make up the S&P 500, if we start with the equal weighting, we're seeing overall we're green. We're seeing bullish on the trend and the swing. And up here, you can see the sectors that are helping to lift the market. So it's energy, information, consumer, discretionary, and telecom. So what that tells you is that it's the large cap version of these sectors that are lifting up the market. And then it gets a little sketchy down in here. We see some greens, some reds, and then total red down at the very bottom with consumer staples and utilities. So we're seeing the same general trend up. We're seeing, again, the green swing going bullish here as of late, but it's really a little more hit and miss at the sector level in terms of where they're getting their strength, with the exception of these right up here at the top that we just discussed. And then if we look internationally, on the international standpoint, it's a slightly different viewpoint. We're seeing a lot more red. We're seeing the overall total international stock market here kind of capping itself. It is just now, look at over here in the lower right-hand corner, it's just now turning to red on the trend, and it has just now turned to red on the swing as well. So we went through a long period here of having an upward bullish trend all the way up through here, but then just as of late, like right in here, it starts to turn the other direction. So something to watch there, again, is the U.S. has been outperforming internationals, and the real question will be, is the rest of the world going to sway back our direction, or are we going to kind of get pulled down into a more bearish viewpoint along with the rest of the globe? And then finally, in the bond arena, bonds, we're seeing bearish across the board. This has been happening for quite some time. In fact, if we take this and come down here to the trend for the total bond market, what you're seeing is we went bearish back here in about June, the beginning of June of this year. The trend turned bearish, and then most of the swing time has remained bearish during that period as well. And then you can see the obvious sloping down, trending down that's taken place in the bond market. So lots to keep track of. Obviously, we are coming into Q3 and the fall, and generally speaking, that fall can be pretty good time for business, but the Federal Reserve is still going to have to make some decisions about interest rates as we roll forward. So we will keep you up to date as that news continues to roll out and we identify how it affects the trends.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report in any security or investment strategy discussed.